Hello? Okay, brilliant. Yes, I can see lots of yeses. This is excellent. Okay, let's start our today's Q&A. I hope that this time around I'll be, telling a fewer things than last time in terms of introduction and leaving the floor really to you all to raise any questions. Before we start, maybe just a couple of things that I would like to mention, and this was actually brought out during my meeting this morning with a few of you who have used the opportunity and attended my office hours. So some of the questions there were really good, and it would be relevant if I sort of highlighted to everyone in the class. Okay. One question that was relevant to all is about how to engage with the articles, how to read the articles. So as you can see from the reading list, we do have quite a number of academic papers to read. And these academic, for each unit actually, apart from one maybe unit where there is literally none or just one paper to read. But at least for the first unit, we do have quite a number of papers to read. So how do we engage with these papers? Firstly, we should appreciate that there are different types of papers. Some papers are focused on generating original results, original arguments, and they are kind of original research based on analysis of some primary data or secondary data. So those papers are normally focusing on just one very narrow research question and one very narrow topic. And by addressing this topic, these papers provide a lot of details about their research design, research methodology. If they are using any empirical test designs, there will be a lot of information about how the data has been collected, how the regressions have been designed, what additional tests, robustness tests have been done, and so on and so forth. So this is one sort of type of papers. The other type of papers, which we have actually in this course less of, are literature review based papers, or more sort of theoretical discussion papers. So those papers, and let me just give you one example of that. The very first paper for Unit 1, the paper by Mark Bradshaw, that paper reviews analyst literature. So that paper in itself doesn't do any analysis, any data collection of primary data. Instead, that paper just summarizes the field of research, or it just summarizes what the other researchers have done in the area of sell-side theme, in the area of sell-side analysts, price targets, investment recommendations, value relevance of their research outputs, and this sort of research questions. So basically, essentially, two types of papers. Now, if we are reading that literature review kind of paper, the Mark Bradshaw's paper, let's say, for your Unit 1, ideally, you want to read through all of it, because you want to understand how the overall literature in this field is structured, at least by that author, and what the main findings for each strand of literature has been, or what are the main emerging arguments for each of the strand of literature in that particular space have been. Okay, so you would want to read that paper, I would probably say A to Z. And it's not a difficult paper to read, it's just a literature review. And by the way, that very first paper is what I have recommended, I believe, last time when we met, you to start with when thinking about your individual assignment, your individual essay, because your individual essay asks questions or is about a topic that is pretty well covered by that literature review paper of Mark Bradshaw. So that paper should be your starting point That's at least my suggestion. Okay. Now, there are lots of other papers also listed in the first unit, and most of those papers are sort of original papers addressing a very narrow research question. Now, how do you read that kind of a paper? And you will, if you have looked already at some, you will see that some of them are pretty lengthy, and they might have 10, 15 different tables with different analyses, with different results, etc. reported. So as part of our course, we don't really need to read through all the content of a quantitative paper that does a lot of testing and stuff. What we want to focus on is the main topic, the main findings, and the main conclusions of that particular paper. So we are literally talking about reading maybe 3, 4, 5 pages from that paper, and those pages would normally be the introduction and or the discussion of results and findings. Okay, so you don't really need to go and read or look through and try, break your head and understand how on earth they've done all this regression analysis and data, analysis and stuff. So you don't need to read those aspects or those bits of the paper. Okay, so what you want is to extract the main arguments, the main findings, the main conclusions of that given paper. And usually those are fairly specific and could be summarized literally into a couple of paragraphs. So to get those summaries, again, you would read through the introduction and the discussion and or conclusion parts or sections of these empirical papers. Okay, so that's how you would read a paper when you are studying a course like ours, and when you are preparing an academic paper-based assignment or question, essay. Okay, so this, however, would have been different. Let's say if you were working on your master's dissertation, the story is different, because in your master's dissertation, when you are targeting a particular research question, and I'm sure you will be thinking about that pretty soon, certainly this semester. Once you've decided on your research question or your research area, then you do want to read through some of the key papers in great detail, including their methodology, including their research design, the exact specification of tests, the sources of data that the paper authors have collected, how they've carried out those tests, what additional robustness analysis, robustness tests they have done, etc., etc. So for your dissertation project, you would read the paper, that kind of paper, A to Z, especially the methodology section in great detail, because you want to be able to replicate or learn from that research process so that you can carry out your quantitative analytical tasks of your dissertation, when let's say you're developing your dissertation's research design and methodology and tests. Okay, but that's not about our course. In our course, we want just some substantive understanding of the main things, main arguments from a given paper. And for that, you just need to read, as I said, those 3, 4, 5 pages of the key points or key ideas that the paper is presenting. Okay, so that's how you would approach reading a paper. So even though the list of papers, let's say for unit 1 or some of the other units, might seem intimidating, you look and there are 15 different papers, you say, oh my God, what do I do? But in reality, when you think of it, how much of a paper you should really need to be reading, that's not that much, considering that this is a 20-credit course. Okay, so that's about how to address or how to go about reading a paper or papers. Now, one more thing about the textbook reading. I don't know how many of you have tried the Palepus textbook or getting access to Palepus textbook. I've just today checked on the reading list that we have for our course on that link. if Palepus textbook is already made available online or not. For some strange reason, the library hasn't yet updated the link, so it's not yet online. But if you go directly to the university's library, if you go to your library account, online library account, and then if you type in the search for books, if you type the name of the book, Business Analysis and Valuation IFRS edition, then in the list of results, you will see that textbook, and with one of the results, you will see that it is available online. So there is an ebook version of it. So just click on it, and if you haven't got the paper copy of that book, you can start reading that ebook. So I've just tried it this morning. This seems to be working fine, so I can just quickly show at least what I see on my screen. Let me just share my screen so that I'm not talking nonsense, but something that is hopefully truth. Okay. Share screen. Why is it not sharing? For some reason, I'm struggling to share screen. Guys, can I ask you, please, just in case anybody else is sharing screen, because for some reason the system is not allowing me to share screen. Is anybody else in that? You shouldn't be able to. Okay, now it's working. Okay, let me share it. Okay, so do you see my do you see my screen here, guys? So what I have here, I have your reading list. And as you see, the Business Analysis and Valuation IFRS edition, the Business Analysis and IFRS edition, for some reason, is showing as if the digital copy or ebook is not available. But then if you go to the library, so I went to the library page, and I basically searched for my book, Business Analysis and Valuation, and it gave me my book, and you see this little icon here, ebook. So that means that book is available to the library. So I don't really know why on the reading list it's not reflected. So when I click on it, connect to ebook, I will actually get to my book. It's already opened. I've already opened it here. So here we go. So that's the ebook of Palepus, right? So you can read it. You can start reading it if you haven't already done or tried that. So that's the very same book, and this is its online version. You can go to any chapter that you want to. Here on the left-hand side, there is a navigation panel. You could actually search for specific words within the text. Let's say I can search for any word like price target or analyst. So it will show you where in the text that word appears, so you could go and read. Okay, so there are for instance, I've looked up that word, etc., etc. And also you could download and store for your later use about 10% of this book, and also copy about 10% of this book if you don't really want to read it online or some of its section online. So this is at least, I hope one problem is sorted for those of you who don't have access to the hard copy of the book. So you could start reading the recommended chapters. So again, for Unit 1, the recommended chapters are Chapter 1 and Chapter 9. And taking this opportunity, can I just remind you, when you are addressing or when you are engaging with, let me stop sharing. When you are engaging with, let's say, the activities for the given module, for the given topic unit, like activity 1 was a multiple choice question quiz. Some of the questions you would probably be able to answer better or understand the answers to those questions better if you have already read the recommended reading. That is the chapters and reviewing some of the papers. Okay, so I don't really have the kind of best strategy for you to engage with those activities. What you could do, you could try the quizzes before reading anything, just to see how much you already know or how much you can already just guess as a logical answer to, and then read the staff material and take the quiz again and see how you have improved. And same with the discussion questions for the unit, the discussion question, I mean the activity 2 question. Again, you can try to discuss or think about it before you've actually learned or watched any videos or listen to anything on that unit topic, and see whether you can tackle it, and then engage with the material, study a bit, and go back and tackle that qualitative question again. So I'm leaving it to you really how you go about it. But I already see one or two people have posted for the activity 2 of unit 1 have posted answers, which is great, which is fantastic. I'm not replying to these posts, so I'm going to leave for you guys to engage with each other. Please do feel free to reply to each other, to correct each other, or suggest what you think on each other's comments or each other's posts. And before the activity is actually marked as complete, I mean by the date which I've sort of identified by when that should be completed, I will probably post just my couple of sort of points on that question, right? But at the moment, I'm not doing anything. I'm not interfering. I'm letting it to you to engage, to interact, to try and learn from one another, to comment on one another. But at the end, whenever the date is, the final date is, I will come in and add a few notes from my end. Okay. So that's about, and pretty much that style we would follow with that style throughout the units. And for each unit, there will be some either quizzes or some additional questions for you to try, and or both. Okay. So for unit 1 and part of unit 2, under unit 1 there I will add one more activity, the third activity, which is right now not there, but later on today or tomorrow I will add that. And that would be a list of questions for our seminar. I think next week we have a seminar, right? So for that seminar, I will post the actual questions today. Most of these questions, or I would say all of these questions, are purely discussion-based questions. Some of them are actually relevant to your individual assignment, essay. So please look at these questions, think about them, maybe some notes, make some notes. And when we have our discussion, live discussion sort of session next week, we will try and sort of get our heads around answering these questions, at least comparing and contrasting what we came up with in terms of answers to these questions. Okay, and there are no absolutely right answers to any of those questions, by the way. Some questions will definitely have completely wrong answers. I mean, any qualitative question could be answered in a completely wrong way, but I would argue none of the qualitative questions can be answered in a completely right way. Okay, I don't know whether you agree or disagree with it, but a qualitative discussion-based question, there is always some latitude, there is always divergence of opinions, and people can back up their arguments their own way, and those justifications could be really good and strong. So many people can be right at the same time, even though their answers might be different. Okay, so I think this is as much as I wanted to brief you on about before I open the floor to your questions. So now it's on to you guys. Please fire away with anything you like to ask using the chat room. And by the way, if you want to ask a question in person with using your voice, feel free to unmute yourself and ask that question. Okay, I would actually quite like to hear some of you or many of you rather than just reading the chat, this chat box here. Okay, anyway, so I can see that some questions are coming through. Yes, the first question was about the seminar question. Yes, I will post under activity 3 the document with the questions for our first seminar. And our first seminar is going to be next week. So today or tomorrow, I will post that document with a list of questions for our seminar next week. Okay, guys, we are silent and nobody's saying anything. Remember, this is not a lecture, right? This is not a lecture. I'm not supposed to give lecture on the topic. This is a Q&A. That's why I'm opening the floor to you guys. And we are actually been told by the university we are not supposed to give lectures or mini lectures. These are Q&As for students to ask whatever you like.
Hi, sorry, I just want to ask you something about what you
Please.
said earlier regarding the textbook. So, is it compulsory to read the textbook, or is it if we don't understand a topic, we should read the textbook?
I would say it is compulsory.
Okay.
Because it is an essential text. Otherwise, how would we know? How would you know that you have covered the base knowledge? Really, I mean, if you only rely on, let's say, videos or the PowerPoint presentations, those are just introductory guides or some sort of summary of guidance around that particular topic. But for any deeper understanding or coverage of the area, you would need to refer to the textbook. Having said that, to be honest with you, there are some topics in the textbook that you already may be well familiar with. So you might think, okay, well, I know this stuff. So if that's the case for you, then you don't need to read it. But at least look at the textbook chapters. If you already know the stuff, obviously you can ignore it. If you don't, read it. And with papers, again, I'm not sure you can get away without reading the papers, given that we have this assignment. Anyway, this is the assignment is undoable without papers.
Thank you.
Thank you. Thanks for the question. Very nice to hear a real person asking a question. Okay, so any other brave person in the class?
Yeah, I have a question.
Brilliant, thank you.
So I have a question about the multiple choice quiz. One of the questions, the answer, I've done the reading, but the answer seems a bit counterintuitive. So a word of explanation on that would be nice. The question is about the countries with model of strong legal protection of investors' rights. And then the answer to this, that the statement that in countries with a model of weak legal protection of investors' rights, it's the role of, it's so hard to explain.
Yeah. Okay, I know, I get, okay, let me just, thank you, Paula. This is a good question. I actually had exactly the same question in the morning today at the, one of the students asked the same question during the office hours, okay? So for that particular question, you would need to read, I've actually made a note what you need to read. You need to read, I think that's page 3 and 4 on Palepus textbook chapter 1. So it will just save me to spend 10 minutes explaining it, but it's a fairly straightforward explanation in the textbook. Even though I appreciate that you are quite right, the question doesn't seem very intuitively leading to that answer that you have as a right answer. But if you look at the pages 3 and page 4 of Palepus textbook chapter number 1, that question is actually right out from there. Okay. Sorry, you had another question. What was the other question? That was, sorry, what was it? The only question, or sorry, you asked?
I mean, that was the only question, but actually the question about another multiple choice question, if that's okay.
Okay, try it. If I remember whatever that question was, tell me.
Yeah, sure. Just 1 second. I'm opening the.
So if I don't remember what the question is about, I will get back to you guys and I'll post some guidance on Moodle. Okay, let's just do that. So if I know the answer, if I can remember what the question was about or what the rationale was, I'll answer now. Otherwise, I will post some guidance there.
So it was the question that says research has shown that analysts forecasts and recommendations have no investment value. That's the correct answer. And we talked about it a little bit with my study group, and we are not sure why is that.
Okay, can you elaborate a little bit more? What are the again? I don't have the list of questions in front of me. I mean, I can open them
So
and
the
find them.
question just says which of the following statements is not correct. Oh, okay. I guess I
Oh.
found the answer. Oh, it's fine. I just got it. It's okay. Sorry.
Oh, fantastic! I wish this was always the case. When you read it again, you just get the right answer. Okay, so are you sure it's fine now? We shouldn't talk about it. Okay, cool. Anyone else with any real voice questions before we go into the chat? Into this written up questions on the chat room.
Hi, Dr. Mark.
Yes. Hello. Hi, Balu.
Hi. Thank you for answering my previous question from email. I do have one more question regarding the question 3. So it says that market neutral funds typically hold security portfolios with beta close to 0. And isn't the beta for market equal to 1?
Yes.
So intuitively, isn't that should be beta close to 1 when it is a neutral fund?
Okay, so what is, let's say if you are holding a fund and your fund's beta, your fund is a portfolio of assets, isn't it?
Yeah.
So your fund's beta is 1. It means your fund is 100% correlated with the market portfolio, doesn't it?
Yeah.
Okay. It means it's not market neutral. It means you are basically completely following the market, whatever that index is, if it's a market index or portfolio. But if you're market neutral, it means that your fund should be completely uncorrelated, should be completely independent of or unrelated to the market portfolio. Yeah. So therefore, the beta of whatever portfolio you construct, if you are a market neutral, should be what? Should be 0. It should be, because otherwise, if it is 1, then you are 100% correlated with the market. If it is -1, you are 100%. What's the opposite of correlated? Negatively correlated with the market, right? So
Yeah.
you are always moving in the opposite direction. So it's a complete hedge against the market. And if you want to be totally neutral or independent of the market, in other words, whenever there are ups and downs in the market, your portfolio is just stable, or at least completely uncorrelated with the market. Then your beta should be 0. That's the basis.
All right, I see. Thank you. I do have one more question regarding the materials in the PowerPoint. It's there's like few steps to conduct the analysis, and the first step it says to know the company's business.
Yes.
And it says that we have to assess the top management's remuneration structure.
Yes.
So I was just wondering what is like the common way to evaluate or assess if it is well-designed remuneration structure.
Okay. There is a long answer and short answer to this. Okay. The short answer is there is absolutely no common way of doing it. Not only there is absolutely no common way of doing that particular task of your analysis of the company's business and stuff, but there is literally no common way of doing any of those tasks listed in the business analysis section. And this is why I think when I was sort of talking about this, I actually started shouting in the recording that this is half an art, half a science. And this is usually very, very subjective process. And every individual sell-side analyst or buy-side fund manager have their own views and approaches to assessing, let's say, people, top managers, or assessing the business. Okay, so that's kind of short slash long answer. The longer, if you want any structure to it, so the way to go about analyzing the remuneration or compensation structure is if you are a sell-side analyst, and if you are covering, not if you are a sell-side analyst, you usually cover one sector or a couple of related sectors, unless you're a generalist. You would be following, let's say, 5, 8, 10, maybe 15 stocks in the same sector. So what you would be doing, you would be benchmarking information about the compensation and the remuneration of the top executives of, let's say, company A with those of company B, C, D, all the other companies in your coverage, universe. Why would you be doing that? Is because you want to understand to what extent one company in your coverage might have a different different sort of incentives to be oriented towards the long-term value creation versus shorter-term value creation. And that's very important because different companies have different aspirations, shall we say it, when it comes to their management. Some managements might be there just to quickly grow the company, okay? And here we're talking about conflicts of interest between the managers and the shareholders, the principals and agents problem. They might be pursuing the objective of empire building, value destroying acquisitions, value destroying non-organic growth options. And it just might be that their compensation structure is actually helping them do that. If their compensation structure, if they're compensated, if their bonuses, for example, are based on some short-term metrics of performance, let's say ROE for the given year, or the growth rates of the company, right, by sales, let's say, then these guys have an incentive to grow their business really, really quickly because they're compensated on short-term KPIs, short-term objectives. But the question is it what the company's owners want? Is it what the shareholders want? And then another question is, who are those shareholders? There are shareholders who are short-termists. Usually those are hedge funds. So if the company is mostly owned, guys, I'm hating that this is turning into a lecture, but anyway, if the company is mostly owned, for example, by hedge funds or very short-term oriented investors who just really want to make very quick money, they really wouldn't care about the company's very long-term projects, and therefore they wouldn't be really focused, or they wouldn't really care to what extent the company's executives' compensation is anchored on delivery of long-term value. Because as investors into the company, they don't care about the long-term, they care about the short-term performance, so they can quickly make profit on those stocks, okay? But in contrast, if you are a very long-term oriented investor, and there are a number of examples, let's say, okay, the most famous one is the Warren Buffett's fund, right? This guy, when he buys something, when he buys a stock, he doesn't buy it for a year. He actually buys it for a lifetime. Yeah. Some companies he held in his portfolios forever, ever since he formed his fund for 30, 40, 50 years. So when you take that sort of investment horizon, and when you look at the company, what do you want? You want the company managers' incentives to be aligned with the very long-term value creation, right? So when you see that the company's managers are compensated for the next years or the last years, or hitting the last year's performance targets or exceeding the last year's performance target, you will say, yeah, but where's the long-term thing in here? Okay, the guy hit the target or exceeded the target this year. He got 25% markup in their bonus. Okay, made good money, but what about the shareholders? I'm the shareholder, I'm the owner of the company. I don't want that. I want long-term value. I want the stock price, the value of my company to grow, the size of it to grow, for me to see long-term stable growth of the company and value. I don't know if that answers the question, but that's at least what you would be looking at in those remuneration reports, because nowadays it is a compulsory requirement for companies to report not just how much managers are paid, but what is the basis, what KPIs are used to determine their pay, okay? So what an analyst should do, the analyst should at least try to compare the different stocks that he or she is covering in, or has in his universe, see, which companies are remunerating their managers differently from the rest of the companies that he's covering. And is that company seems to be a very short-term oriented? If yes, then probably it's a red flag. Okay, but as I said, it's never black and white. It's always your own judgment as an analyst, how you make sense of it.
All
Okay.
right. Yeah, that's crystal clear. Thank
Okay,
you.
brilliant. Any other real live questions before again I go to the chat room,
Yes.
please?
Hello, Dr. Mark. Just have one question. Like, how the market defined value, or let's say price, about the forecast and the recommendations.
Can you, sorry, it was a bit crackling, at least, I don't know, my earpiece was a little bit unclear. Can you quickly repeat the question again? Sorry. How the market is defining, what did you say? How the market is defining value?
Yes.
Hi, sorry, can you just repeat the question? Sorry. Oh, you're typing it. Okay. Right, once you're typing it, I'll get back to that. And then any other live question?
Excuse me, I have a small question about our individual essay. It said that we should aim to cite at least 8 relevant academic papers. So I'm wondering how many listed papers we should contain and how many papers searched by ourselves we should add to our list.
Right. Okay. This is an essay. One of the assessment criteria for the essay is your ability to basically identify relevant papers individually, right? So for the first unit, we have a number of papers listed there. So you can obviously, as I mentioned already a few times, you can start from there, and you should indeed start from there. How many papers, it's entirely up to you, but let's say we get an essay where there is only 3 papers discussed or 3 papers mentioned. For a question of this nature, which is pretty broad and comprehensive, I would say 3 papers would absolutely not do justice. And also that research area on analysts' accuracy, biases, their information environment, conflicts of interest, etc. This is an area that has been researched extensively, and there is so much published on it. Then if you just limit to, I don't know, a few papers, that might not be presenting a good picture, a good view, giving a good view of for the research question. So we are asking to cite at least 8. So at least, well, I didn't want to ask that to be honest with you, but to put the number there because I knew, but I knew the question would be, okay, so how many do we should be? So 8 is a target number for the papers to be read and cited, but you can do more. Okay, you can do more. So how many more? Again, please don't ask me because it depends on the style of referencing. Because sometimes you might find that one paper is one of the core papers on this particular little aspect. Okay, so that paper deserves to be discussed in a good paragraph, maybe in half a page or a third of a page could be devoted to that paper to discuss, or maybe even more. But then you could have came across another 55 papers that pretty much confirm this original result. So what you could do, you could add a sentence and say that, look, by the way, more recent studies such as blah, blah, blah et al, blah, blah et al, blah, blah et al also show or confirm or, I don't know, point to the same factors or same conclusions, okay? So one paper could be explained, explored, and discussed and debated in detail. And then there might be quite a few cited, but only cited, without really going into any details of the other papers, right? As a guide to you, what you could look at when you're reading papers, academic papers, look at how the academic papers refer to academic papers. So each academic paper that you would be reading will have maybe 1 or 2 or 3 core prior academic papers to which they are talking to in a way in their study. But then they will have maybe another 30 papers that they reference, but not as core papers. They reference those to back up maybe just a sentence or an argument or another sort of little aspect. But those other 30 papers would not be the core papers. Same with your assignment. I'm not saying that you should be going and doing 30 papers. That's way too much. But in your assignment, you could present a good level of engagement with, as the assignment indicates, about 8 papers, which would demonstrate that you've actually read them. But you could then cite other papers that are relevant without really engaging in very in-depth discussion of the content of the other papers. Does it make sense?
Yeah.
Yes. So again, as a reference point, just as a learning exercise, when you're reading academic papers, pay attention at how academics write, how academic work is written. So your main point of argument would be defended, would be discussed by more extensive reference to maybe 1 or 2 key papers, right? But for some smaller arguments or points, your reference would be rather brief and maybe just even in a footnote style. Okay, so I hope that I've sort of answered that question, but
Yes.
let me know if it's still
Makes sense. Thank you.
okay. You're welcome. No worries. Any other live voice questions, guys?
Oh, hi, Dr. Mark.
Hello.
I have a question.
Please.
I have a question about Unit 1. In Unit 1, let's say a private interaction with company management is an information source, but isn't illegal insider trading?
Ah, this is a fantastic question. Thank you. Thank you. Okay. Now I'm thinking how to answer that question without really touching on your assignment. So if you read the literature on analysts, on more generally on information intermediaries and equity research, what you will see is that traditionally, one of the advantages of information intermediaries, such as sell-side financial analysts, has been that these people have some level of access to company managers. And that level of access is definitely better than individual investors, and maybe better than institutional investors. Let's say you are an individual investor. I am an individual investor myself, okay? I play on the stock market just with some money for fun and to test some of the hypotheses that I'm teaching, sometimes successfully, sometimes completely disastrously. But anyway, that's a different thing. So I'm an individual investor. Let's say I've bought stocks of EasyJet some time ago at the start of the pandemic, which I actually did. But for me, a very big information disadvantage is that I don't really know what EasyJet managers have been thinking at the time or are still thinking at the moment. All I could rely on public information that they disclose. Now, the work of analysts is a bit different. What analysts do, they do rely on public information, but because they are covering, or let's say they have been covering EasyJet for a number of years, and they have been going to various events organized by EasyJet, like investor conferences, investment roadshows, analyst Q&As, etc., some social events. And because analysts are writing or have been writing on these companies, both analysts and companies would regard it important if they build some relationship. Okay, so why that is important? Imagine the company has just disclosed its earnings, interim earnings, or whatever. Let's say quarterly results if it's a US company. So for an analyst, if he has or she has a relationship with company manager, or if they know more or less each other, they could phone up or even post a question to the company managers to explain, let's say, that number. Well, this is not to say, give me more information, give me insider information, but to give me some color. And this is the color. It's a very sort of jargonish word used by sell-side analysts and fund managers. But what they mean by color is some sort of interpretation, some sort of extra about that particular disclosed number. Yeah. So the companies are not going to say anything that they haven't already said. But if you're a sell-side analyst and you could see the actual manager in person, even his or her body language, the tone, and the confidence is an information signal for you. Right now, I'm sitting in front of you guys. I don't know, some of you might be looking at me, some of you might have turned the screen off and actually know they are even in the room. So I don't know. But I certainly see 3 or 5 real people in front of me. And to me, that's a lot of information because I can see your facial expressions. And when I answer a question that you post, I can see your facial reaction. Okay, I don't see your whole body to judge your body language, but at least I could guess whether you were satisfied with that answer, or you were dissatisfied with it, or you were still not quite sure, not quite believe what I said, or not quite accept it. To me, that's an information signal. Imagine now that I'm an analyst and you are company executives. Or vice versa. I'm a company executive and you're the analyst. So you ask me a question and I give you an answer. So from my voice, from my body language, from my confidence, you could believe me or you could not believe me or that answer. But if you don't see me, if you don't hear me, you could only read my text that I've typed. Okay? So I'm pretty much telling you the same information. But now you have access to me. You could assess that information differently. You could have the color on that information. Same with analysts. They have that, they value that relationship with managers because that allows them to get that extra, potentially non-verbal information from the company executives. And then they would overlay that impression on the actual numbers of their analysis before they communicate their advice recommendation to their buy-side clients. I don't know, does it touch on what you were asking? So it's not quite insider information, no. Managers are not disclosing insider. But to be quite honest with you, before the regulation FD, which we came about in 2002, almost 20 years ago, yes, there were some pretty frequent examples of flow of insider information. So yes, it was happening. But nowadays things are so tightly regulated that nobody really, no fund manager, no sell-side analyst, and no corporate director would want to be implicated in channeling any or using or providing any insider information. Okay, because the penalties are really, really dear. People go to jail. People do go to jail. That's not something that people would normally do nowadays. Having said that, there is quasi-insider information, if you could call it that way, as I said, that additional signals that sell-side analysts can get when they meet real people in a one-to-one meeting, in a low, if you are a fund manager, if you're a big fund manager, let's say BlackRock, Fidelity, I don't know, State Street, some of the world's largest fund managers, you could be holding 5 or 10% of the company's overall capital, stock, equity. So you would have a one-to-one meeting with the company executives, right? Okay, they are not allowed to disclose privately to you sensitive information, but you are sitting in a room, just you and him,
Yeah.
the CEO or CFO, okay? And the way he talks, the way he presents, the kind
Yeah,
of
yeah, I got it.
movement of head, the body language, all the rest, that's all information. How confident he seems, or they seem, or she seems, right? So for that reason, that access to information is still very, very valuable. To some analysts, not all. Then there are those analysts who completely ignore that information. Those would be normally quantitative analysts. They use their analysis, they build their analysis purely on numbers.